Good morning, everyone, and welcome to the Quantum Leap morning pre-market analysis and trade plan setup for Thursday, June the 12th, 2014. Of course, today is rollover day, so we will be dealing with the September contract, not the June contract. Current ES spread is approximately 7.25 points. Current TF spread is approximately 4.6 per contract, on the June to the September. For those that are just joining us for the first day, I am Doug McKay. I'm the founder and the moderator for Quantum Leap. We are a private organization. We have been around coming up on 5 years, and we have a Skype room that are just retail traders helping retail traders, and we come in and talk about the market, talk about our trades and our observations, and then each morning we come into this live session to go through my analysis and set up my charts and my trade levels and my hypothesis for the day. Of course, if you're watching this on YouTube after the fact, we do go through a normal routine where we look at the macro to the micro and then we drill it down, look at the trends macro to micro and then drill it down, and then we get into some more in-depth volume profile charts and analysis, and then we set the levels and the targets up for the day. If you want to get more information, send me a Skype request at Doug_McKay. I'll give you an invite to the Quantum Leap room. Also, coming up very shortly, we're porting everything over to our new website, which will be stealthtrader.com, and we will actually have a chat within the website itself. And you can send me a request for information at d.mckay@stealthtrader.com. So let's get going. We've got lots to talk about with the rollover, but I need to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan. Do your own due diligence. Okay, so let's talk about, we don't have any of the key numbers, but we'll go through them on the composite. But let's go and take a look at the news first. Of course, we just had unemployment, and we had core retail sales, and unemployment. All three of them missed. Didn't get too much of a reaction, but the first gut wiggle was to the downside. Of course, we've got business inventories at 9 Central, 10 Eastern, natural gas at 9:30 Central, 10:30 Eastern, and then we've got the Canadian Bank of Canada, Governor Pelez speaking at 10:15 Central and 11:15 Eastern, and then at noon Central, 1 Eastern, we've got the 30-year bond auction. So quite a bit of news still. This is the one that's really, you want to keep your eye out if if you weren't trading this one. Looking at the new ATR targets for the day. Again, these are September contract numbers. Our Globex high, or full session high so far, is 1940.50. Our full session low is 1935. So our 20-day ATR target to the upside is 1947.75, and to the low side will be 1927.75. So mark those down on your chart for extension. Now, unfortunately, looking at the big picture, macro to micro, I've got to use the continuous contract. And with Thinkorswim, they don't roll over until tonight at midnight. So we're just going to look at the structure of the market rather than the actual numbers itself. And I always like to do this exercise first every morning because I want to know where we are within the trends on the macro to the micro, so on all the different time frames. And that gives me context of where we are in the marketplace. So right now we've got good slope and separation on the monthly. Trend has been intact all year long. We've just got this incredible bull market. We are creating a bit of a technical gap against the 9 EMA. The two EMAs that I use are the 9 EMA, 20 SMA. Those are the ones that I choose to use. Not saying that you can't use other. Those are the ones that I use. But we got good slope, good separation. Trend is intact, but we are getting a technical gap on the monthly. Going over to the weekly, same thing. We had a little bit of weakness here. This was the first close below the 9 and the 20, going back all the way into August of last year. But since then, we've popped back up above the 9 EMA, and we've held it, and now we've gone parabolic, and we've got a strong trend going on, but we're creating a pretty significant technical gap for the weekly. So I'm looking for this gap to get closed, either through consolidation or through price, or a combination of both. But we are seeing that we need to get some type of a pullback, with the last 3 weeks being such parabolic. But the trend itself is still very much intact. On the daily, we had talked about this technical gap here. We've come down. We've basically closed it out through time and price, and we've rejected the 9 EMA and held. So we're losing a little bit of slope, but we do have separation. But the trend itself is still very much intact on the daily. Now going over to the geometric chart, we haven't had any opposing forks. And we still really didn't have any. I had to actually go down to the 4-hour to pick up an opposing fork. There are a couple interesting energy points. At 1939, 1940 area. That's on the June contract. So you'd be looking at basically 1932, 33 area to come down to this this energy point that we've got here. But we're still holding above the center line of the short-term upward sloping fork, and until we break below that, you got to continue look for a bounce off of this line. We're testing it now, and then coming up and retesting the upper line of the intermediate upward sloping fork. And that would be, if we did it today, that would give us a new high, and it would be roughly, would it be a new high? Sorry. 1958, so you'd be looking at about 1951. It would give us a new high on both contracts, June and September. But it's really, you want to watch this level right here in around the 1930, 1931 on the September contract. And if we break that, then we're likely to come down and test the lower line, which will take us down somewhere in around the 1910 level on the September contract. It's a little bit confusing when you've got the continuous contract to go by. If I go and just try to put in the the September contract. Whoops. It doesn't. I don't get a long enough time frame, and I should have gone and drawn them on here. But I'm going to wait till the rollover because I hate having to redraw all my forks. Going back to the intraday, to look at the intraday trends, we do have that head and shoulder pattern that we were looking at yesterday that I pointed out. It has not been invalidated yet. The measured move was down to 1935 on the June contract, so that'll take us down to about 1928 thereabouts on the September contract. But this is still in force. But you can see that the trend itself, we had a really strong trend on the 4-hour, and we've kind of halted the trend, and we've been in consolidation. We are trading below the 9 and the 20 on the 4. So, you know, we're seeing some weakness come into this market, but I'm not convinced we're completely out of the woods yet to the upside. You can see the reaction that we had off of the job reports and the retail reports. We had a pretty strong move down. Again, the same thing is we've been in this downward trend, but they're kind of consolidated sideways on the 30 minutes, so there's no real direction on the 30-minute. Going down to the 15-minute, same thing, consolidation with a move down, and we're seeing some weakness in the marketplace on the 15-minute. On the 5-minute, well, this looks more like we've got the start of a trend happening here, and we've come down and had this technical gap right here, came up, closed the gap. Now we've got, we've rejected the 9 EMA, and we've created this this new technical gap, and we'll probably get a pullback somewhere to about 1942.50 on the June contract. I wanted to point this out to you because this is one of my favorite patterns, and we were talking about, Scott and I were talking about this last night, and the auction was kind of weird last night because usually these are more reactive patterns, and we get a quicker move, but it looked like it was going to be a failed pattern, but it is one of my favorite, and it does have a very high expectancy, and this is called a FUBAR, Mr. Sneaky Tech Gap. So you've got a FUBAR, and you've got twice the 20-day median volume. You've got a green candle with a long wick. Usually the wick has is the same size of the body or greater, and then on the delta you get the corresponding wick on the delta. I'm not showing the delta here on this chart. Then you get the inside bar, the Mr. Sneaky, and you've got a technical gap. These are really strong, and actually if you would have traded this, you would have got in on this bar right here, so you would have got in around 46 and a quarter, and then you would have had your stop 48 and a quarter, and you can see that it never failed. It got up to as high as 47.50, and then we had a nice move all the way down to 44 and a quarter. So, but it was acting weird. It looked like it was going to fail, and then all of a sudden, damn, I don't know what happened. It finally realized that the pattern was it. I don't know. Kind of funny. All right, so let's take a look at the big picture on the composite. And not the ES, not the Russell, we want the ES. All right, so nothing really changes in terms of the market structure when we do a rollover. I mean, you still have volume at price and all, you still have the same structure, just everything gets adjusted by the spread between the two contracts. So currently, just to walk it through, we're in this this balance in around what was 1865, has been adjusted down to 1858, and we were just trading in this balance, and then they accepted value a little bit higher up around the 1860 area, would have been 67, 68 on the June contract. Then we went out and we tried to break out. They went up and accepted value where they tried to hold value on the last high, that 1890. I'm sorry, yeah, 1898, and I think it was 1898.50. Been adjusted down to 91 and a quarter, which was an all-time high. Then they tried to hold value. It was 1890.50 on the June contract. It's now 1883, and then they accepted that value, and then they broke out, and then they gapped up, and then they held value up here at 1900 on the June contract. It was 1908. Broke out again, came up, and then we were holding value in around this 1921.75, 1922.75, and 1914 and a quarter in the September contract, and then we broke out of that, and we just kept on grinding up, accepting value, and then moving higher. And then we went and made that all-time new high on the June contract at 1954.50. Is it 54.50 or 54.75, Howard? I don't have my numbers in front of me. I think it was 54.50. If somebody can type that in the room for me. But now it's been adjusted down to 19. Okay, so it's 1954.75. It was right because we were looking. We were only a few ticks. We were 3 ticks off of that 1955.50 measured move. But now it's 1947.50, and we for the last 4 days we've got a microcomposite VPOC at 1939.25, and we're trying to hold value up around there. Our value area high right now is 1943.25. Our value area low is 1936.75. We're currently broken out of value, come down and tested the CLVN below us, broke down, and yesterday afternoon went down, which was that 1938.50, and that was just a beautiful move. And we talked about that, and we traded down into it, and then we traded up off of it, and with that break of the 1945, and we were looking for that move down to 41.75 and then down to 38.50, and that's been adjusted to the CLVN is now 33, and the CHVN below us, the accepted value below us right now, is 1931. Since then, they've bounced off of it, broke back above the CLVN, got inside of this smaller distribution. You've got 2 CHVNs here at 37.25, which is just inside the 36.75, so I'd be looking at 36.75 before I looked at 37.25, and then you've got this 35.75, but we're holding above the key long-term price rejection, and well, if you want to call it that, because we've never been here, it's only long-term in terms of the compass right now is 4 days, but we're holding above this area. If we get below this, look for a rotation back down to 31.25, and if the buyers don't step in the next time we come down here, then I'd be looking for a bigger rotation to come down into this area, which is basically very thin unoptioned territory, and test this 1927 area, but I'm really looking at this 24. Half back of the significant breakout candle is in around 26.27, so that's where I'm watching it right here. And if we get below this level, I really think we'll see some weakness come in. We'll come back down, do some repair down here, and come down. The first level that we'd be looking for responsive buyers to step in is down here at this 1918.75, possibly even 16.75. 16.75 is going to test the range of this triple distribution that we were talking about on the June contract, or undetermined fair value is probably, it's more than a triple distribution, but the main key number in there is that 1914.50. In the June contract, it's 1921.75, I believe, or 1922.50, thereabouts. But then we've got some, some undetermined fair value. When we get back here, I expect them to try to hold it here as we chop around, probably come down and test this 1906, but I don't think we're going to get right through here. I think we're going to come down here, okay, get a dead cat bounce, and come back up and finish the repair that we need to do here, try to suck some more longs in before we get a bigger retracement. And if we can, if we do get back up into this upper distribution, then we're going to see a move into new all-time highs, and I think if we hold above this 1906 level and then bounce again, that will actually go up and hit the 2000s. I don't know if it's going to happen, but if they can hold value in the 1900s and then break back up and accept value back up in here in this 35 to 40 area, then I think the bulls will get bulled, and they'll try to push again, and we'll probably go make up some new highs. We still have a measured move up at 1966, which would be adjusted down to roughly back towards that 55.50, which was the measured move on the June contract. Anyway, let's move over and take a look at the overnight and then set up our levels for the day. I need to get ES. I needed that contract. All right, so overnight right now in the June contract, oh, we just went and put a new low in while I was talking. So we're coming down and we're testing these lows right now. So currently right now our overnight low is 32 and a quarter. I'm sorry, 32.75. Just keep an eye on that for me, Howard, so we can make the adjustment if we go lower. And then the overnight high is up at 40.50. And our current VPOC, and I don't think our VPOC is going to shift overnight, 1937. So here's what we have. Let's get rid of this because we don't need this. So we have, you know, we're going to open auction inside a range but outside of value. We actually had a very tight range yesterday. The range was only 6 3/4 points yesterday. But we're going to be, you know, if we stay above 31 1/4, we're going to open inside a range but outside of value. So we're going to have some choppiness, especially with the rollover of the contract. So be very careful. This to me is a no trade zone. Anything in this area right here. You might want to try to play off the 32.75, but it's not something that I would recommend. I think you really have to wait until you get down here, and the first, you know, the first area that I'd be looking for responsive buyers to step in would be in this 1931 1/4 area, basically right around the CHVN, and see if we can hold inside of range. So I'd be using this as a either a breakout trade to break out of range, or a reversion to the mean trade to trade back up towards testing the value area low and closing out the naked VPOC. So the other level that I would trade would be, you know, this this value area low at 35. You know, in between that, I think you just, I mean, there's no real edge there. So I would just caution you that if you try to get you know, long or short here, you really don't have any real determination on which way it's going to go. I think you got to wait to see if they reject value or they reject range, and then if they, you know, break out of the let's deal with the downside first. If they break out of the 31 1/4, just that's going to be too busy. I was going to try to bring in some of the prior days. We'll just deal off of it here. If we break out of 31, there's really nothing holding us up until we get down to 27. So I'd be looking for 27 as your first target, and an area that I would use as well as a trade area. And those that know my charts know that a trade area is a target as well. And if I'm already in a contract, I'll scale, or in a position, I'll scale before I get to the trade area, but I'll also use those trade areas to enter trades and also add on to trades. Below 27, you know, everything is going to, your first target below is going to be this 26, and that will be a target at 26. And you want to get scaled and into this, you know, before you get to the 26, with 24 being the other side of balance around that. Below 24, I don't think we have any support until we get down. And this 1918 is going to be my my main target below range. 1875. And then the other side of balance down there, and will be the test of that range high off that microcomposite, is going to be the 1675. And then if we're just looking for possible extension, because we got to have scenarios in place, if we get below this 1675, then we're into this undetermined fair value. The main target below is going to be this 1415.
You have to pay for it? You have to pay for it?
1415. And then you've got this 13 and a quarter, 1175, 1075, and 0875. And it's really the 0809 area that I'd be watching for them. So I'm not going to put them all in here. I'm just going to put 09. And once we get into this area below 1675, I anticipate that we're going to play ping pong in between these numbers with these, these other values in between, and we're just going to chop around in this area and hold. That's the first area that I'm expecting to really hold with the break below that 1927. If we come up and we hold inside of range, remember, we're likely to take out the overnight low first at 32.75. So my main hypothesis is to come down, is to chop around in this area, come down, take out the 1932.75, test this 31 and a quarter, and then look for responsive buyers. And if we see responsive buyers, then I'd be looking for them to rotate us back up to test the 1135. And this could play in reverse. We could come up and test the 1135 first, get responsive sellers stepping in, and then go down and take out the overnight low and test the 31 and a quarter. Either way, I think we're going to test both sides of this this area. And that's my main hypothesis. And then my secondary hypothesis are based on a break below the range and a break out of range and the move down to test lower, or to break inside of value and go up and take out the naked VPOC at 37. We've got the naked close at 36.50. I'm sorry, did I say 37? Naked VPOC at 36, take out the naked close at 36.50, and then the overnight VPOC at 37, and test the value area high up here at 37.50. That would be where I'd be looking for responsive sellers to step in between the 37.50. You're likely to get a little bit of a push through because you've got the range high at 38. And remember, you've got market still has memory, so you've got the 1938.50, which is on the June contract. They're likely to test it on the September contract. So if we come up and we test this value area high, look for the breakout and a push through to 38.50, and that's going to be my first target above range, is at this 38.50, and I will take the trade above 37.50, the value area high, for that test of 38. I don't think 38 is going to hold. I think the first spot where you'll find real responsive sellers, if they don't hold inside of value, is at this 38.50. And then above 38.50, you've got 39 and a quarter as the most accepted price of the microcomposite, the 4-day microcomposite. So you got 39 and a quarter, and you've got 40 and a quarter naked VPOC, and this was already tested overnight. It's the same VPOC that was 47.50, but naked VPOCs that are put in the RTH session are still naked until they're taken out in the RTH session. So even though we went up and had a high, above it, I think the high in the September contract was 48.75 or something like that. we're likely to go up and test this. When you break out of this range and out of this value, it's going to be very hard to fade this until you get all the way up to this 43.25. So just be careful on the fade here. There's really nothing there. But you've got this range high up here, and then you've got the value area high for the microcomposite there as well. So I'd be looking at that as the first spot that you could actually, have a safe edge to fade a breakout above range and above value in this marketplace. And if we don't hold at 43, then look for a test of the 47.50 all-time high in the September contract. Now remember, the market has memory, and one of the reasons why I don't think that we're done with higher highs is because of the fact that we're going to have a all-time high, technically at 1954.75, and that's likely to get tested in the September contract if we hold the 1900s, and that's why we're likely to get a retracement right now, but I don't think that this is that the all-time high is in just yet, because we've got some equalization to do up here at 54.75. So just be very wary of trying to fade any breaks above range and above value today until 43.50. And if they break 43.50, all bets are off, and the retrace is going to be rather shallow for another push to all-time highs. I'm hoping that's not the case, as I've already started working a swing short. That I started earlier this week, and hoping that we get a bigger move down. Let's take a quick look at the Russell. I'm running out of time. I'm going to be really short with the rest of the analysis. I wanted to get a firm grasp for everybody on the ES. So I know that I usually do the Russell as well. But we're just going to take a quick look. So right now, overnight on the overnight high on the Russell. I don't have my Russell composite. All right. Overnight high is 64.30. So just a couple ticks above yesterday's high. Again, these are September contracts as well. Overnight low is 57.40. And the overnight VPOC, which isn't likely to change with where we're trading right now, is 1160.80. Just below the VPOC from yesterday. So you've got the same scenario. Let's get rid of this. We don't need that. And again, we've been trading. 4-day balance right now is down here, 1159.20. We're trading right around that. Our value area low is 1158.30. A break, I'll use that 1158.30 and a break outside of the value area because of the composite, of the microcomposite composite, because I think that will give you, and I wouldn't even wait for the open. If this happens, just get short into this takeout of the 57.50. Again, just like the ES, we're going to take out the overnight lows likely, on the open. If you're looking for, if it does go up and test the value area low from yesterday at 59.40, and we reject it, look for them to come down through here to take out the overnight low. You've got the CLVN, a key CLVN right here at 55.60, but you've got the range low from yesterday at 54.80, so I'd be looking for a little bit of a push through. You know, this rejection area right here is rather wide, so I'd be using 54.80 for either responsive buyers to step in and hold us inside a range and rotate us back up towards value, or a breakout of range and a breakout of value. And the first target below will be this 1151.60 CHVN and the range low from the microcomposite range low. So what did we say that was? Oh, it's a target, sorry. Actually, it's going to be a target in a trade area, 51.60. Okay, and then we got this area similar to what we have on the ES, where we have undetermined fair value at 43, 44.50, 46.70, and then we've got a naked close here at 48.30. So below 51, I'd be looking to target this 1148.30 and 47, but I think it's going to be rather choppy in here, with the main target being this 47.60 and then the 46.50 micro or CHVN, I should say. And then the only, you've got a little bit of a CLVN right here at 45.70. So I put the other side of balance down here at 45.70. And then below that, you've got 44.60 and 43.20. What did I say? 44.60 and 43.20. I don't think we're going to get much lower than that today. Come on. All right, to the upside, if we get above value, real simple, okay, rotation back up to take out the overnight VPOC, the naked close at 61.10, and the naked VPOC from yesterday, and chop around in this zone, go up and test the value area high, 80% value area play up at 62.80, and then if we break out of value, look for a move to test the overnight high and the range high from yesterday in the 64.10, 64.20 area. Above that, you've got nothing all the way up until you get to the 66 area. No, that's not even correct. That's from June. So 67.60, you got nothing. I mean, above here, same thing. If we get outside of range and outside of value, you've got nothing to hold us back until you actually get up to, the first response, I would say, would be here, right here at the 66, 67. Your value area high for the microcomposite is 67.30, and your CLVN is 67.60. So I'd be using this this whole area right here as as a target and a pot. The first spot you could look for a fade. For a reversion back down towards the range. And then above that, you got 69.10 range high, 69.70, and 69.80 naked close and naked VPOC. And at that point in time, I think you're going to see us go. We've got this big major target up here, up in the 82.30, 81.30 area. So that's what I'm looking at on Russell. So that's going to complete our morning homework session. Sorry I didn't get time for gold. We got started late with some technical problems and lots to cover when you got that rollover. So there's enough volume in both the June contract and September contract. So don't worry about if you haven't rolled. Just take all my numbers and add 7.25 points and try to figure it out. Everybody have a great day. Trade well, trade safe, and we'll catch you on the flip side.